Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face. Today's guest is Brian Horner, president of the Tech Coast Angels LA chapter. He's also an angel investor and a board advisor to several seed stage companies in Los Angeles. Brian, welcome to the show.
Thank you.
So with Tech Coast Angels, what I want to start with is what areas do you invest in? Are you focused on? Let's just start with that.
Yeah, so we're an angel group, 400 members, and each member really has their own focus group. So we're agnostic, but true agnostic. You talk to a lot of VCs and they say they're agnostic and they, we don't do frontier tech or we don't do medical. We do everything. We go into biotech, frontier tech, hardware, so we touch all points, and it really is dependent on, what angel investor likes, what their background is, what their interests are.
Yeah.
So we see the gamut. Yeah.
Kind of all over the place. Then.
Yeah.
Yeah. And then as an angel group too, how is that check size? Where's the range on that? How does that work for you guys then?
So it's very different in angel groups because again, it's individual people making the decision. So we have invested. Each year we invest about $12 to $15 million between all of our members, about 400 members again, and it's between 40 and 50 companies. So the average check size is 300, but the variability or the standard deviation is really wide.
Yeah.
We've had some companies where 30 investors have come on and it's raised several $1 million. Jeez. And then every now and again there will be one investor that likes it a lot and writes one check for 25 grand.
Yeah.
So the spread is really wide, and it really depends on which investor likes the company.
Yeah, and then you mentioned it was like 40 to 50 companies investing in it?
Per year, yeah.
Per year, roughly?
I kind of looked at the averages, and some years more, some years less. We actually, this year is going to be a banner year. We just launched a sidecar fund. Normally we invest about, $15 million, like I said, but we've already surpassed that in the first half of last year.
Wow.
So we've moved away from the individual checks. We're still doing that check, but we actually have a sidecar fund that can add an additional 100 to 500 grand, depending on how good the company is or how much we like it.
Yeah.
And like check size has gone up.
Yeah, and then you said obviously like 400 different members of.
Yeah. There's 5 chapters from LA to San Diego. The main chapters are LA, San Diego, and Orange County.
Okay.
Each chapter operates differently. Companies apply to the chapter, and if San Diego gets an investment, for instance, they'll usually do a roadshow to the other chapters and say, hey, we're invested here. We've done the due diligence. Here's the packet. It's all kind of bundled up for you.
Okay.
So we share deals a lot.
Yeah.
And that's kind of how the check size has kind of increased.
Yeah, you mentioned too with the due diligence process, and how does that work across all the angels? Like, what does that process look like for you guys?
So the whole process for a company coming in is, they apply, they do a quick pre-screening where a few angels will just look at it and say, oh, I think this is something members would like. This is kind of up our alley. It's got it's launched. It kind of fits our minimum criteria. And then they'll come in and pitch live to a group of, 40 to 50 people in the room, and we meet twice a month.
Okay.
And then after that, the angels will circle up and say, oh, who liked this? Who wants to follow up? And then anywhere from 1 to 20 people will then follow up next week, do more of a deeper dive, hour long, and then kind of break off and do their own due diligence. So usually it takes about 30 days to get from when you pitch to get a check.
Yeah.
And then once one chapter kind of invests, then they'll go to other chapters and say, hey, look, we're investing 300 grand in this chapter. We'd like to raise the full round. So LA, will you take a look at it? Or San Diego, will you take a look at it? And hopefully we can fill out the whole round.
Yeah, and obviously some venture capital firms are going to have, not necessarily angels, but we'll have an investment thesis, that type of thing. How does that work with Tech Coast Angels then in terms of that?
Yeah, it's really dependent on each individual investor. My own thesis, I'm pretty agnostic. I stay away from frontier tech and biotech just because I don't get it, and I don't like to just completely rely on someone else for their opinion when I'm making my decisions. But we have a lot of doctors that are kind of in the space, that know the space, that can make informed decisions. So our life sciences, it was actually 50% of our portfolio last year was life sciences investments, because we do have some expertise in that area.
Yeah, and then with that too, with having so many different members, you mentioned it's kind of shared from one kind of chapter will share with another chapter. How is that flow back and forth between deals? Like, you know that this might be a better deal for them based on their knowledge, or how does that go with Tecos Angels?
Yeah, so we'll never really send a deal for, like, if someone comes into LA in the life sciences space, we'll look at it first.
Yeah.
We'll like it, and if there are some interested members, we'll then send it down to San Diego and say, hey, you guys should take a look, because there are a lot more physicians down there. But the beauty of our chapter is we kind of all know one another. We know where the industry experts are. So from time to time, we'll say, hey, Don, will you take a look at this? I know you have a background in, cardiologist. This is kind of a heart company like this. I'm in the energy space, so if you see anything in the energy space, I'll get a call and say, Orange County's looking at this. What do you think about, distillate, trading? And I was my opinion on that.
Yeah. And then with that too, then with that due diligence process, like, what helps companies stand out, or what are some things that they have where you see a company, you're like, okay, we definitely need to take a look or take a deeper dive in that? Where for you guys, what are some of those things?
So, I mean, everyone's gonna say this, but the team is like where it starts and finishes, at least for me.
Yeah.
Because we are so early stage, it is so incumbent that you're really investing in a person and not the idea or the product, because there's so many pivots. When you're starting out a business, it's going to change so many ways. One of my best investments is pivoted twice now to almost completely different. So you're really investing in someone that is competent enough to see, kind of read the tea leaves and change, the business. So you're saying, I'm investing in you, not your business. Other things we look at is just like sizable market opportunity. Like, there is like a big idea out there, and like there's a way to kind of capture the market, like in a real way.
Yeah.
We also look at moat and barriers to entry, defensibility.
Yep.
That doesn't mean you need a patent on your idea, but there has to be something that says, okay, if another entrant comes in, you have an advantage over them. Be it, your 10 years experience in the space, or you've already kind of made some real progress in, customers or key contacts in the industry. Things like that.
Yeah. And then with that too, like talking to founders, talking to these teams, obviously it's so important that you're betting on them, not necessarily the idea. What are some of those questions? What are some of those like actual things you would ask them? Be like, okay, we want to know X, Y, Z thing. And then maybe it's different across all of them, but if anything you can think of that would be helpful in that way.
Well, I mean, a founder really has to have passion about the idea. I would much rather have someone with a background in the space that knows it, than someone that just kind of went through and said, oh, this is an interesting area. I want to get into cannabis now, right? So it's really kind of having an expertise, telling a story, telling why you're different than another entrepreneur that's probably doing the same thing. What else can I tell entrepreneurs? I mean, really it comes down to just like honesty, and letting us feel that you're kind of being straight with us.
Yeah.
I think we've seen enough deals that we can tell when someone's kind of, BSing us
a
little bit. So, some of the best deals have been companies have come forward and said, look, I don't know the space. I think there's an area, but I'm going to try it. And the checks come out. But we're like, I know this, I know that. It's a little bit harder to kind of believe that. So humility is big for a founder, in my opinion.
Yeah, I think it can go a long way. I think someone else we interviewed mentioned that same type of thing, like humility and being authentic with your story and everything. And are there things that for you guys are like you're pretty much going to say no to, or things that are red flags in the process if you're going through?
I mean, dishonesty is kind of number one.
Yeah.
Another big red flag is just not understanding your competition. And if there's something that I can kind of find in 2 minutes of kind of diving into it that you haven't mentioned, it sort of raises the flag. Like, what else are you kind of hiding?
Right.
But yeah, I mean, that's kind of the first red flags.
Yeah.
There's no, like, obviously there's other things that we'll get to know, but the ones that are like, instant no is kind of, comes down to a character, flaw or something.
Yeah. And then through that process, just diving a little bit deeper, like with how has that kind of changed as you've gone along, maybe the last few years into this? Like, how's that changed in terms of that process? Has that process kind of stayed similar? Has it evolved in some degree? Like, I'm just curious about
that. The due diligence process?
Yeah, your
TCA
process that you take. Yeah, TCA.
Well, we've gotten faster because we've just kind of, looked to the market and kind of followed their signaling.
Yeah.
This is a 20-year-old group. And for, I don't know, probably the first 10 years, we were the only real check in town. So we had sort of the power to kind of do whatever we wanted in the sense of taking as much time as we needed, and things like that. Now it's gotten competitive. Deals have gotten competitive. Valuations have gone up. and people will get multiple offers from multiple places. It's a great time to be an entrepreneur. It's like the best time.
There's more money.
Yeah, there's a lot of money floating out there
Yeah.
chasing deals. So we've gotten faster, and we've been, I have been, since I started, that's kind of been my primary driver, is really getting to know faster.
Yeah.
Getting to yes, obviously, but I've heard that the second best word that an entrepreneur hears is no.
Yeah.
Because they want to move on. And I am respectful of that. I'm hypersensitive to that. So I want to get to a decision as quickly as possible to let them move on and use their time accordingly. One of the things that I've found in our companies that I've invested in, they lose a lot of time and a lot of traction when they're going to raise their A round. And you kind of see, these metrics flatline. You're like, what happened? Well, I was raising around for 4 months,
right?
Because I thought I had this deal, and then they kind of, pulled it at the last minute. So I'm very respectful of that, and I think, that's something that the entrepreneur community is very small. It's very tight knit, and it starts to get out there if people are, not being honest or taking too long or whatever. So it's just really a matter of kind of, cracking the whip on our investors to say, look, make a decision.
Yeah.
You said you were going to call this person for an opinion. Do it now and don't wait a week. You know what I mean?
Right.
And that just comes down to being really disciplined and kind of, making it a focus of your priorities. Yeah.
Yeah. And especially thinking just long term, right? Having that reputation that you guys do make decisions quick. You don't like, oh, give them a maybe. I've heard that too. You give entrepreneurs these maybes and they're like, okay, well, I can't do much with that. Or you give them a no, okay, they can move on to someone else.
Yeah.
Or,
I wonder how much of that is like a West Coast versus a East Coast mentality.
Yeah.
I come from East Coast and we're very direct, and I think it's a little bit different out here.
Yeah.
People don't like to hurt other people's feelings. They don't.
Yeah.
It might be that. But it is hard to say no to someone. It is hard because a lot of the time it's face to face, and it's hard to do that. So we've kind of gotten away from that, but I think people appreciate that directness. In my, what I've seen. Yeah.
Right. And there's probably a piece of that too, where you don't want to miss out on something, obviously. So you're like, you maybe keep the door open by doing that, or is there any of that type of feeling too? Maybe
there might be that. You might be right. Yeah. There might be, keeping your options open, I guess. I mean, there's parallels to a lot of different things there, but maybe that is a little bit some of it too. Yeah.
Yeah. And there's so much to that. And then, so you mentioned kind of, there's really certain things to look for that obviously in these founders. There's some things that are clear, like no, within this. Is there anything else in that due diligence process that you mentioned being faster about that, like that helps you become faster at making these decisions or evaluating it quicker? Or is there anything that kind of has helped you through that?
What do you mean? Can you rephrase
Because
that?
like you said, as there's been more money out there, the landscape is changing. Then how have you evolved to make sure you do make faster decisions? Is it just, you know what I mean? Like
the big evolution is just fund that we've raised.
Yeah.
So,
Okay.
we wanted to be able to write bigger checks, and we write them faster. So the fund that we have can make a decision very quickly.
That's helpful, yeah.
And it's kind of one major reason is to launching the fund is to let entrepreneurs know that we have this additional cash of money that we can kind of tap into.
Yeah. And then with Tech Coast Angels too, looking at these entrepreneurs that you're working with, are you pretty hands-on, hands-off, case by case basis? Like how does that kind of typically go with
I'm hands-on unless I can actually help.
Okay.
I like to stay out of entrepreneurs' hair, but and I think there is a bit of too many cooks in the kitchen, I think. So I am at least cognizant of the entrepreneur's time, and if I can't be of help, I don't want to stick my nose in. I'm investing in the jockey. I'm investing in them. I want them to be making the decision. With my money. So that comes down to why we evaluate the person. And there have been a lot of deals that we've seen that we're like, this is a great opportunity.
Yeah.
But I don't know if this is the person that can execute it, unfortunately, but I can't count on one of us stepping in or something like that. Yeah. And I also don't want to be that direct and say that just feels kind of wrong to me, to say I can do this better, or someone on our team can do this better, or so we don't. I tend to just kind of be a little bit more hands off. But if I can make connections, I will. Like one of our deals was looking for real estate connections, and I have a few people just from UCLA in the real estate space, and I was able to set them up some pretty good contracts here in LA. So that's one instance where we can be helpful, and that's kind of another reason why we started the fund, was because we wanted to activate a lot of our inactive members. We have again 100 people in LA that have 20, 30, 40 years experience, and just invaluable Rolodexes, but when they're not invested in a deal, it's really hard to say, hey, can you open up your contacts even though there's no personal value? Because it's not something you can tap into indefinitely, right? It's not an endless well. It's like, I can only ask this guy for so many favors, right?
Yeah.
So what we want to do with the fund is we want to say, look, you're kind of invested in this already, so this behooves you.
To help you.
Monetarily, if you kind of help this out. So that's kind of another major reason is we wanted to kind of tap into this network. And in my opinion, that kind of makes us, that's kind of our most powerful asset is these contacts that we have with so many people, but it hasn't really been utilized. So this is kind of one way to uncap that potential.
Yeah, and just looking from an outside perspective and looking at other venture capital firms, they tend to be pretty small, right? In terms of how many people are actually in there necessarily. So you having 400 members across, there's a lot of networks, which seems like such a huge value add for someone working with Tech Angels is to have that network as they can get contacts, whatever they need, depending on their business.
Yeah.
It seems like a huge thing there. And as you've worked with different founders, all these different companies, what have you seen as some of the biggest challenges they face, these founders, these entrepreneurs, and how have you helped them through that?
I mean, the challenges are different at every phase. So phase one, it's really forecasting, not understanding that it's not going to be a hockey stick. It's going to be kind of incremental growth. And are you budgeting accordingly for that? Is your target investment raise enough to get you to some pivot point where you're now going to be attractive to a Series A investor, or are you going to run out of money? You just have to go back to seed again, and now you're kind of diluting yourself a little bit too much. And then as you kind of go further, you get more into, all right, they got to check now they're spending too much too quickly. There was a company that when I first met them, they were working out. Remain nameless. They were working out of a house that was in demo permit mode. So they were trying to demolish the house. They had 5 to 6 months until the demo permit went through. Yeah. So we might as well rent this to someone. So they had this house, they're working out of there. They got a pretty big check size, and then the next thing you know, they're on Venice waterfront. They have a 26-person office. There's 5 members there, and it's cushy real estate. And I'm like, why do you need this big? Oh, well, we'll grow into it. And I'm like, this is and I've heard that from other VCs is that, you want to stay budget conscious as long as possible. So, it's a good problem to have that much money, but And then you get into more of the problems with personnel, and I haven't really seen any, because we're lucky, we're early stage. We haven't, the teams have not been together too long. There's not a lot of money on the table, and really there's not a lot of time on the table. So if it's not working out, there's usually a clean break. So, but it's a lot easier to leave, 10% of a $2 million company than 10% of a $200 million company, where you can put in 5 years of your time versus 5 months. Yeah. So we haven't really seen any of that yet, luckily. Yeah. But yeah, I mean, the early stage is really, it's just knowing your market, knowing your competition, and knowing it's going to take a long time to get there. Yeah.
And obviously you said you're pretty hands-off for the most part. When these entrepreneurs and founders, when they are struggling with growing their business, are they coming to you typically right away? Do you have how those relationships go?
Every entrepreneur should, and most that I know do send out sort of quarterly or monthly updates and say, here's what we're doing, and here's my asks. Yeah. Do you have anyone in the shoe space you could talk? Do you have any contacts in manufacturing in China? Does anyone? And as you're building kind of your network, just keep an email chain. There's a lot of companies I passed on that keep updating me every 3 months, and I say, I actually know someone, and I'll just reach out and say, hey, you should talk to this person. So I would say really keep that network kind of, energized or up to date with where you are. Yeah. Because there are a lot of contacts out there, and you'd be surprised as how you do it. So that'd be kind of my biggest piece of advice, is to kind of keep reaching out to people and asking for help. Yeah. Yeah, and then with the Tech Angels itself too, different chapters obviously, and there's different people in each one. How often are you meeting within your chapter and going over things, and how does that work with Tech Angels? We meet twice a month. Okay. And we usually screen between 3 and 4 companies. The companies that come in apply, and then they do go through a little pre-screening sort of committee looks at them, because we don't want to waste people's time. Yeah. Because it is valuable, right? So what we want to make sure that the companies that are coming in have the best chance of funding, so that we'll find 3 or 4 companies that we think this has a high likelihood of getting funded. they'll come screen live, and then we'll kind of start the due diligence process. But yeah, it's twice a month we meet.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. So as you're evaluating different deals and stuff, obviously looking at different industries, you mentioned like all across this different spaces with Techos Angels. What are you most excited about coming up now, or industries coming up now?
So, I really like the EV space. So I'm looking at anything from like battery infrastructure, anything that's kind of in line with that. I think there's going to be a lot of uptick there. I don't see that, changing anytime soon. Things that I'm not seeing yet, I really want to see more elder care. I want to see more communities for elders. Focus. I think more and more, older people are getting a little bit more tech savvy, and before they were just kind of ignored. But I think there is an opportunity there. That's kind of, security, I think, is going to be a big thing. I am, I'm all for Big Brother. I'm fine with security cameras everywhere. Yeah. But I think that we're going to kind of, in the next kind of recession, there's going to be a security issue, and we're going to need a little bit more. So something in that space. In that realm. Yeah. So you're okay with the data being in their hands as long as it keeps everyone safe? I couldn't care less. Yes, yeah, I feel the same. I don't understand. Yeah. Like what, no one cares, but like what sure. ads you're looking at, like, and so now you're seeing ads for something like a shirt that you actually might want to buy at J. Crew versus like Metamucil. So like, this is the beauty of Facebook and Google is they can splice up this time and make it, make ads, the ad space, work for everyone and, right. and more, I don't know, like focused. And this is kind of why you're seeing so many startups right now. It's not that there's this, giant amount of flush capital and we're at this bubble. Yeah. It's that it's so much cheaper to advertise. It's so much cheaper to get your customers nowadays. Yeah. Because, the billboard out there costs the same amount of money. But if that billboard could be seen by only 30-year-olds, 30-year-old males that are into soccer, and it would change, you could splice that up many different ways and it'd be a lot cheaper, right? For sure. So, and that's kind of what Facebook and Google do. So I'm fine with that. I don't mind targeted ads. I'm fine. I understand that I'm probably purchasing more things that I don't need. Yeah. But I'm okay with that. Yeah, I mean, it's one of those things where it's then relevant to you. Wouldn't you want to see? You're going to see them anyways. Like, you're going to see ads regardless. Exactly, yeah. And if they're personalized and relevant to you, then it's like, okay, I'm okay with the same thing. Especially coming from a marketing background, you see why it's useful, and then you're like, okay, well, I don't want the wrong ad, and I'm like, this is a waste of my time. Yeah. So I can see where it's fine. And I see the creepiness, because you'll search something and then you'll start seeing the ads for it, or you'll say something. I mean, people say like the cat food thing, right? Yes. Wait for you to check your phone. Yeah. But I don't know. I don't see it as creepy. I just think it's like interesting and smart. Like they've like figured this out. So I don't know. I look at it a little bit differently. Making it easier for everyone around. But you mentioned the senior care thing too, though. Like, what do you see as opportunities within that? You said there are going to be opportunities within that. But I'm like, if you saw different startups maybe in that space, or what types of things within that industry you think that could be big? I think there's a lot of loneliness in older people. I think there's a lot of isolation, and I would like to see less of that. I know, males tend to die faster than females. There's a lot of, older single females out there looking for friends, looking for things to do. And they can't do it. There's not like a meetup, or they try meetup, but no one's looking at it. So I think, I don't know how to tap into that market or make it a little bit easier. I know, seniors are a lot more on their mobiles now. So maybe more of a mobile based than a web based, which is kind of what we've seen so far is just web based stuff. But they'll get it, that is an untapped market, I think, for for something, and it's a pain point, you know. And
Yeah.
I think people would appreciate it. I think it's, you know, you see all these, you know, you go to Tech Disrupt and everyone's trying to make the world a better place, and this is making the world a better place. I have this new camera, it's gonna make the world a better place. But this would actually make people happy, you know, and I'd like to see that. So
Yeah, which would be great, obviously.
Yeah.
And then just with the electric vehicles too, like anything else in there, like particularly you said the batteries, you think that's more opportunities in there, or like what do you?
Yeah, I mean, you know, battery technology needs to improve. You know, the highway, we don't have charging stations everywhere. There needs to be that. But like cars talking to one another, making, you know, accidents, you know, obsolete, hopefully, you know, solving for traffic. You know, we're going there.
Yeah.
It's just a matter of who's going to be, you know, be pushing that. Yeah.
Right, who's gonna actually take us there then from that point. And obviously this is looking at like startups and different opportunities for them. How do you see like the venture world, angel investing, all of that kind of evolving, or where have you seen that going recently, and like any opportunities there, like how it's going to change your business for Techos Angels as well?
We've had massive evolution in the last 10 years, you know, and really the last four to 5 years, it's really picked up. And it's kind of twofold. One is obviously crowdfunding. It's democratized sort of access to these markets. But really, it's the fact that a lot more people are falling into the accredited, you know, definition. You know, this accredited investor, for those that don't know, that are you're only really allowed to pitch to accredited investors are they have $1 million in capital or $200,000 in income. That definition was set, I think it was like 1983, sometime in the early 80s. But it hasn't changed. So that, you know, when it was said, it was like, oh, this is like 1% of the population. Now it's like 10 to 12% of the population fall in that bucket. So there's a lot more people that have access to this. So you have that alongside with, you know, increasing amount of, you know, crowdfunding campaigns.
Yeah.
Friends and family rounds. It's like a little bit less, you know, there's more people doing that now. So that's definitely raising the valuations in the top end. But consequently, what we're seeing now is the back end is getting compressed. And I think that, you know, Wall Street is sort of pushing back and saying we can make up our own mind, and they're not going to take the valuation that Sand Hill throws at them. They have, you know, they're thinking for themselves. And this WeWork IPO, you know, and what's happening, what's going to happen with SoftBank, I think, is going to be a real pivot point in the VC community. So I think that, you know, there's not going to be as much money to be made in VC for a short period of time. Yeah. Or it's not going to be as easy. You know, there's still an opportunity. It's not easy as it is. Sure. Yeah. But, you know, there's always going to be winners to be picked. But even, you know, even the kind of the okay ones are going to be compressed a little bit more. Instead of like a 6x or 8x, you're going to have a 2x maybe. Yeah. I don't, you know, that's kind of my 5-year kind of thinking. Yeah. And
someone mentioned recently too, I think another guest on this show was saying like going more towards profit versus always strictly just growth without showing any profit. What do you think about that? Or what do you think?
It's really hard because all these industries are such land grabs, and I understand the argument for build a profitable business, and that's really a family business, and that's not really you know, something that a venture capitalist wants. They want growth. They want to see an exit. They want you to grab a lot of market and then someone else buy you because you have this market share. Yeah. So it's not, you know, there are a lot of companies that come to market that are not profitable, and they're like, this is crazy. But if you look at Amazon, I mean, they weren't profitable for 15 years, right? As publicly traded company. Yeah. But look at them now. So I think there is still an opportunity to grab land and to reinvest in yourself and reinvest in your company. You know, I understand, you know, going to profit and kind of, you know, doing it more organically and slowly, but that's not something that a venture capitalist is interested in, because they're really constrained by their investors, their funds. You have to return your money in 8 to 10 years, right? So they're not interested in you kind of slowly growing. They want everyone charging the line and getting as much growth as you can in that, you know, 5, 6, 7 years until you go to sell.
Yeah, difficult to see how that would change, because
Yeah.
they need those returns. I mean, so to make a fund work, just looking at the dynamics of a fund.
And even angel investors aren't constrained by that, but they're still kind of looking for that because they're like, if I want, profits, I'll invest in real estate. I'll invest in, in stocks or, any other sort of, I wouldn't say safe, but safer investment.
Yeah.
This is kind of carved out as an alternative asset. And, you kind of say, all right, this money I could lose, but if it's a home run, it's going to, it's going to do something for me.
Yeah. You're willing to take that risk for that chance.
Yeah. I mean, that's what you sign up for is you sign up for those outsized gains because that can actually change, your lifestyle.
Yeah.
A 5% dividend is not going to change one's lifestyle.
Right. So, it's not going to, not much at least.
But that said, it's important because I think a lot of entrepreneurs, are looking, they might have a business that's better suited for family businesses. And if you drive down from here to San Diego, you see just mansion after mansion after mansion. These are not all CEOs of, Tesla. These are, pizza chains or like small, very small, you're making 200 grand a year on this very, specific neighborhood business maybe. And you can have a great living doing that. I think we've just, and this kind of comes back to, we're looking at CEOs are new celebrities now.
Yeah.
So everyone, all these, it's like opposite ends of the same barbell as like people in, intelligentsia or like writing their scripts or writing their business plans. They're both looking for fame really. And I think that's, that's a great driver. It's a great motivator. But if you're running a business, maybe you should step back and say, what am I doing this for? And is this better suited for just sort of a slow growth, family business? Yeah,
and there's obviously, like you said, nothing wrong with that. And there's also a very small part of that entrepreneur population that is going to need venture financing to accelerate their business. That it's the right fit even for venture. Like everyone's not the right fit for venture. I remember hearing the story of this company that's like, I think it's cookie on demand delivery service in like one day. And it was like great business, profitable, everything. And then when they end up closing, it was profitable, but it was never supposed to be a venture-backed business. They tried to do it, just didn't work out. And so you really have to think about that in the model itself. And knowing that there obviously are companies that are looking for venture financing, we've kind of talked about your thoughts on how you approach companies, but what should those founders, those entrepreneurs be looking for in an angel investor and any investor in their company? What should they be looking for?
So, early stage, you're going to be going to friends and family. A lot of the VCs that started as pre-seed ideas have kind of moved up the chain a little bit.
Yeah.
And one is partially de-risking, but two is they've just started raising bigger funds, and you just can't fill an $80 million fund with $200,000 checks. So you're really sort of getting back to sort of the friends and family and like, traditional angel investors. And what I would say to, early stage entrepreneurs doing that is really ask questions and say, what have you invested in before? Because there are a lot of, people out there that aren't real investors and are kind of just looking and not really. So before you waste your time in doing all these due diligence and calls is say, what have you invested in before? I've talked to a lot of entrepreneurs that they get really frustrated in the raise process because they've just gone on all these calls and meetings and there just was never any, light at the end of the tunnel, even if it was the perfect pitch or the perfect idea. So I would say, the first questions to be, what have you invested in? And that can be kind of a filtering mechanism.
Yeah. What about what would be next, or what are some other ones potentially that you think they may be valuable for them to ask these investors?
Well, besides what have you invested in, how have you helped the companies you've invested in? What connections have you made for them? Give me an example of what an intro you've made for them, or a staff member that you've kind of introduced them to, or some way to add value to the business.
Yeah.
I will say though, in the early stage, that's a luxury. The first thing you should get is a check.
Yeah.
But if you have the luxury, if you're 1% of these startups that has the luxury of having so many checks you don't know what to do with, then you can start really sort of interviewing them. But I wouldn't go in with those kind of questions because it might turn off some people.
First thing, get the money, and then go from there as it goes. And for you, like, why did you get into angel investing in the first place?
Well, I got in because I wanted that sort of alternative asset class. I had real estate and stocks, and I was like, I'd like to kind of diversify a little bit and have access to some sort of home run potential. So I joined TCA to kind of, because I didn't, I've never been an angel investor before. I knew a little bit about VC through business school, But the more I sort of learned, I really, got hooked on it. And, when I was in business school, my favorite courses were, venture capital, business plan development, anything in the entrepreneurial sort of track. And I kind of went back to that, and I just really liked it. So once I joined TCA, I just kind of made it almost like a full-time job. Even though I do have a full-time job, to kind of get, as up the curve as quickly as possible, and really kind of, put myself in the community and kind of get myself out there and try to better TCA and get better deals and, be a better investor.
Yeah, and wanting to do angel investing, how did you get to the point where you decide to join TCA versus going on your own or someone else? Like, how did you get to that point of?
Well, yeah, it was easy for me. So one, I had no access to deals. So I wouldn't even know how to go about finding them. You could go to some of the events, but how do you even, two is I wanted a group of 100 people that were smarter than me around me, helping me with the decision-making process. I remember the first TCA meeting I went to, there were 4 companies that pitched. And I was like, I didn't bring enough checks. they all sounded great. They were like, where? Yeah, where do I sign? Yeah, I don't have enough money here. So, but they're like, no, just wait like 6 months. You'll start to see, what's good, what's bad, and what to look for. So I did make it more of an educational process. And so that was the other thing. And 3 is just access to the CEO to ask actual questions. If I'm writing a $25,000 check, that's not really going to make a dent in the CEO's raise. So it's not really worth their time to sit down with me and ask, answer due diligence questions. But if I'm in a room with 10, 20 people and we're all of a sudden going to write $500,000 worth of money, now we have access to CEO, we can ask questions. We also have access to kind of, down the road if we want to, if they're coming to us for help, or we can kind of improve the company in any way. So it sort of magnifies sort of the power of your money, it being kind of that group environment.
Yeah, and then with that too, how much time are you spending with TCA in general? You said you have 2 meetings, obviously, per month, but how much time are you spending? How's that kind of look in terms of?
So I'll be taking over as president next year. Yep. So congrats. I was vice president this year. I probably spend 5 to 10 hours a week, and a lot more sometimes. We're raising this fund right now, which I'm spearheading. So the last 3 months have just been trying to put this all together, from the fund accounting and the legal, and so that's been a lot of work. But yeah, it's as much time as you want to put into it. I actually like doing this. It's I like.
You enjoy it?
Pay me for it.
It's amazing.
It's finally a job I like doing. So,
awesome. And I have to ask then, with raising the fund, how's that process gone for you? What has that been like for you? Obviously, you haven't done it before, right?
No, and it's an internal raise. I'm not going out to LPs and on a road show or anything like that.
Yeah,
that is
from your
very difficult
different,
process.
right.
It's all internal.
Sure.
The fund is all, is restricted to only TCA members.
Yeah.
So it's been good. A lot of people get it. They understand that it's going to improve TCA's deal flow. They understand it's good for them as an investor to have diversification, because really these are home runs or strikeouts. So you need to have as many, companies in kind of a portfolio to get a real diversified return and to get the industry average. And then also just kind of, they get the idea that this will help TCA, activating members, maybe getting more members in. It's just all positive.
All good things will come from this.
Yeah, hopefully.
Yeah, that's the thought process at least. And how did you get to that point of figuring out how much you want to raise, or the target for raising? How did that go?
Yeah, it wasn't really, we didn't have a monetary target on it. We obviously wanted to cover the cost of the funds and make it economical for investors, which we've done. But, and we wanted to make it enough that it would, help entrepreneurs in the seed stage. It was would actually make a difference. An extra 100, 200 grand is going to make a difference, in around that early stage. Yeah. So that was kind of where we started as a target, but really I just wanted as much participation as possible. I didn't really care about the net total, but the number of investors was more important to me, because that I feel like there's more auxiliary benefits of having more people in the fund.
Yeah, and with you too, you mentioned you actually enjoy this. What is it about working with TCA that you like so much, that you enjoy so much, that maybe it's been different from other things you've done?
So I was, I was more of the assembly line Ford worker. I was trading electricity futures. PJM, East Coast electricity. I know the ins and outs of like these really local markets, but it was really hyper focused, and it was the same thing day in, day out.
Yeah.
And I was a bit like, Sisyphus, like pushing, the P&L up the ladder, and then it resets to zero every year.
Every time.
but this, it's more of like a bit of like a consulting role where every day's new, every day's different, every company's different. I'm learning about, every company that comes in, I have to kind of educate myself on that industry very briefly.
Yeah.
So I find it like, intellectually satisfying and really rewarding in that respect. I like working with founders. I also am like adjunct faculty at TCA.
Yep.
So I help, I'm kind of running their, or helping with their BCO, business creation option course.
Okay.
So I do that, for 2 semesters a year. And I just like working with young founders and hearing ideas and trying to, help them out. It's just, it's a very satisfying kind of day to day.
Yeah. And not to be negative, but what are the challenges or what are maybe the not so as fun things for you and within this as well?
Yeah. I mean, when I started taking over or like being more of the VP role,
sure.
There was just a little bit more of stuff that had to be done versus like I wanted to do it.
True.
So, there's that, but someone has to grease the wheels and
right.
change the brakes every now and again. Yeah.
Sure. But I mean, it does sound like a fun thing to do, lead that. And
yeah,
you're
I'm very lucky.
Which is amazing. Is there anything else you'd mention to either founders start trying to launch and grow their businesses that would be helpful for them to know from your experience?
Yeah, I would say go to as many events as you can in LA. I mean, there is no excuse not to be out at all these events like, Lava, SoCal Tech. There's, most universities have calendars. You can find events all over the place. And then once you start signing up for some, it snowballs into others. And there's 1 or 2 events every single night in LA
so
that you can network with other people, entrepreneurs, VCs. So really just getting yourself out there and getting in the community and talking to people is probably the most helpful for a very early stage entrepreneur to kind of, educate themselves.
Yeah. And then for you personally, what's been most helpful just in terms of like, as you're growing in terms of this angel investing thing, like what's been most helpful for you?
Yeah. I mean, the most helpful thing for me was just sitting around a room of, 40, 50, much more intelligent people than I am. And, understanding how they make decisions, why they make decisions, seeing what companies work, what don't. There's, with this isn't, like with, you buy a stock and you have an instant feedback of whether it's up or down.
Yeah.
I come from an equities background. So so when you see that, you know if you're doing right or wrong.
Yeah.
And mostly in life, you get kind of this instant feedback. The feedback loop on angel investment is so long that you really need to count on other people to say like, this is what I've seen that's doing it right. Cause you don't have that instant feedback. So I'm hoping the deals that I'm invested in are doing well, but I'm confident that they are. Because I have made, educated decisions and gotten in kind of and followed kind of some smart people. Yeah.
Right. You're trying to do all the right things and you're kind of just waiting to see if they pan out eventually, I mean, there's only so much you can do. What is the easiest way for people to reach out to you, connect with you?
Yeah. So we have a website, Tech Coast Angels. Go on there. There's an entrepreneurs tab. It'll say, what we look for, what your stage should be. And then, apply online. You'll see probably members of TCA at all these events, Santa Monica, Hollywood. There's probably a TCA member at a lot of these events. You can just chat with them and say, hey, what's the process like? But yeah, I mean, it's apply online. It's 5 questions, and then, go from there.
Awesome. Brian, thank you so much for coming on the show
Cool.
today.
Thanks for having me.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.